Welcome back to the Wall Street Podcast. Today, we're going to dig into the HSBC Bank Australia Limited's latest Commodities Digest. It focuses on tariffs, trade, and agricultural commodities. This report just came out, August 28, 2025. And our mission here is really to unpack the key shifts happening in global agricultural markets. We're looking at supply, demand, and policy drivers.
That's right. The report flags a pretty significant trend right off the bat. We're seeing about a 9% fall in agricultural commodity prices over the last 6 months. Grains are leading that slide, but it's more than just numbers. It really details how tariffs are reshaping trade flows. Major importers are shifting where they source from quite rapidly, and performance varies a lot by category. Meat prices, still very high, finer foods have been volatile, and importantly, the outlook is for continued volatility.
Okay, so that 9% overall drop is the headline. But let's get into the specifics because it sounds like there's a lot happening under the surface.
It's exactly. The World Bank's agricultural index, yes, it's down 9% year-to-date. Grains specifically, down 11%. Now, grain prices are lower, mostly because of these trade tensions we mentioned, which is interesting when you compare it to, say, U.S. production forecasts. They're actually quite strong. Strong how? Well, record U.S. corn production, up 13% compared to last year, and U.S. wheat exports are up 6%. So production is solid, but trade concerns are weighing prices down. Rice is a bit different. Global prices are down significantly, about 33% year over year, because supply has improved. But Japan is, an outlier. Prices there are shooting up.
Why the difference in Japan?
It seems to be a combination of things. A heat wave back in 2023, strong local demand, and dwindling stockpiles. So they might actually need more imports, even with tariffs in place. And soybeans. They're really feeling the heat from U.S. trade tensions.
How so?
A major importing region has cut back U.S. imports quite substantially. And maybe more telling, there are no pre-purchases booked for the next U.S. harvest yet. That's an unusual delay.
That delay is noteworthy. It really shows how policy can overshadow strong fundamentals like production. But you mentioned meat prices are high. That seems totally opposite to grains.
It is. Completely different story. The FAO index for meat hit an all-time high just last month, July 2025. Beef prices are up 19% year over year. Pork is up a huge 29%. What's driving it? Strong demand, especially from key global markets and the U.S. for beef, and also several supply constraints kicking in.
Constraints like what?
Things like a U.S. ban on certain cattle imports, California's Proposition 12 affecting pork housing standards. That's had a big impact. And even avian influenza leading to poultry culling. So it's a mix of demand and specific supply shocks.
Right, so policy decisions and even animal health are having these big global price effects. What about the finer foods, coffee, cocoa, that sort of thing?
That segment's been volatile, but actually eased off recently. Prices are still high compared to, say, a few years ago, but cocoa's down 22% year-to-date, coffee down 18%. That seems largely thanks to better weather in key growing areas like Côte d'Ivoire, Ghana, Brazil, Vietnam.
So some relief there, but potential risks remain.
Definitely. For instance, U.S. tariffs could dampen demand for orange juice. It shows how quickly weather can help, but the underlying vulnerability to price swings is still there.
Okay, this brings us to the bigger picture. These aren't just market fluctuations, are they? How are these trade policies and geopolitical factors really reshaping the supply chains themselves?
Well, it's not just that tariffs are diverting trade. What's really striking is the speed at which some major players are rerouting their agricultural imports away from the U.S. We're talking about potentially long-term shifts here, creating new trade pathways and dependencies. This obviously carries risks for global growth, hitting export demand, and food security itself is becoming a bigger geopolitical issue. You see restrictive trade measures on food doubling over the past 2 years, much more than for energy or metals.
Doubling. That's a stark indicator. Food security moving up the geopolitical agenda. But alongside policy, there's always weather. How do climate factors interplay with demand in setting prices now?
Yeah, good weather helped finer foods recently, as we said. But climate volatility, think of rising temperatures, more frequent heat waves, La Niña forecasts, which often mean unpredictable weather that remains a huge risk across agriculture. At the same time, you have potentially slower global growth, partly due to those same tariffs and general uncertainty. And that slowdown impacts demand, especially for things like raw materials, edible oils. It's a complex interaction.
A complex dance, indeed. So looking forward, what's the projection for stability, or is volatility just the new normal here?
The World Bank seems to think prices might hover around current levels, maybe dip slightly in 2026. And this is the key takeaway, heightened volatility is expected to be a persistent feature. Things like extreme weather, crop diseases, sudden policy shifts, geopolitical tensions, these are flagged as the critical drivers going forward. It's more about the swings than the level itself.
So constant flux. Okay, let's bring this home. What does all this mean for you, for the average person?
Well, think about your grocery bill. You should probably expect meat prices to stay elevated for a while. That reflects the strong global demand and those specific supply issues like Proposition 12, which aren't quick fixes. And for finer foods, your coffee, your cocoa, even though they've dipped recently, they're still really susceptible to sudden shocks from weather or trade policy changes. These aren't just abstract market movements. They directly impact household budgets, what you can buy.
A clear link from global trends to the checkout line. That was a really insightful deep dive into these market forces.
It certainly raises a fundamental question for the future, doesn't it? How exactly will global food systems manage this balancing act, trying to secure domestic supplies while also navigating increasing trade fragmentation and this ongoing climate variability? It's a major challenge ahead.